Hello and welcome to Tokenverse podcast series, where we bring together creators, blockchain specialists, investors, intellectuals, and experts to brainstorm the potential and the future of Web3 technologies. This production is being sponsored by DoinGud, an NFT marketplace, which brings together people who want to do good across the world. In this particular episode, we're going to discuss the subject of NFTs and taxations, and we're very lucky to have extremely experienced, successful, and inspiring guests today. And I'm going to start with Thabo Abbate, who specializes in providing accounting services to cryptocurrency-focused clients. He's a CPA and partner at Arbitus LLC, which is an accounting advisory firm dedicated to serving cryptocurrency businesses and investors. And prior to this, he was working with PricewaterhouseCoopers, auditing and consulting practices. So obviously he's the right person to be discussing the subject and advising us, giving us different tips on the collecting as well as creating NFTs. Also, quite an interesting trivia about him is that he used to be a big gamer. Like, what was it? The fact that he was the only thing on your resume at some point, Thabo?
Yes. Back before I became a CPA and started my professional career, I was a big gamer. Still am a big gamer, and to the point where on my first resume, the only experience point I had was that I was a guild master in World of Warcraft, and somehow I made it from there to where I am now.
Here you go. That's fantastic. Next, we have Dan Hannum, who is a buy-side analyst and portfolio manager at TD Ameritrade. And he was also an early investor and analyst at Blockchain Capital before finding Hannum Capital Management, where now he's a founder. And so this is an advisory and venture investment firm. So also quite interesting fact about Dan, that he used to be an athlete. Is that correct, Dan?
I used to be. Now I sit behind a desk, so not as athletic as I used to be.
What did you used to do exactly?
I played lacrosse at the University of South Carolina. So a game that involves like sticks, and it's more of a Native American game that evolved over time, but was lucky enough to be able to play that at a collegiate level, and used to be able to run around, and now I can't.
Wow. I'm sure you still got it. You still got it.
Yeah, for sure. It's great to have people with interesting paths in this industry. I'm all for this. We should have more kind of eccentric characters in the blockchain NFT space. And now we also have Andrew Kline, who is a co-founder of DoinGud, and he's has strong experience in consulting, corporate finance, auditing, and accounting. In the past, he co-founded Saibi, a social education tech startup in Madrid, which focused on empowering children to be safe and responsible on the internet, which is a very smart idea. And we've also got a special funny fact about Andrew that we just found out now, that when he used to study Spanish in Venezuela, he actually used to do La Bomba. Maybe Andrew can explain everyone what La Bomba is.
La Bomba. Well, it was known in Mérida, where I was studying in Venezuela, as the drink of choice in a group of friends, going out and getting to know the local scene in Mérida. So it's a drink where it's a pretty crazy combination of different adult beverages of choice. And Ania seemed to know what it was too. So we had a bit of a laugh of what that scene was like in Mérida.
I think we should bring La Bomba to DoinGud, but of course in NFT format. So basically, maybe we can bring a couple of creators together, and they could, mix things and then force the collector to buy it. Just like on how about that?
Next podcast episode.
Yeah, we're going to make podcast episodes to brainstorm that, I think. But let's go back to the subject of our conversation, and perhaps Dan, you're in the right position to explain to everyone what is the situation when it comes to NFTs. Perhaps quickly explain what NFT is and how is it different to a different object that someone might be buying, and how the taxation of it looks like.
Sure. So an NFT, the acronym would stand for non-fungible token, and non-fungible tokens are a token standard that was created back in 2016, 2017, really popularized by kind of two bigger events, which were CryptoPunks and CryptoKitties. And the ability for NFT to create digital scarcity online was really kind of the unlock that allowed this new wave of non-fungible tokens to proliferate. So essentially what an NFT is would be a one of set. So typically some prime examples that you see is one of 1, 1 of 10, 1 of 10,000, like a CryptoPunk or CryptoKitty. And essentially what this NFT is that it's provable ownership of a digital asset. And what that can create is really massive. What we've seen come out of NFTs really revolve around digital art, which is probably the biggest subset of NFTs that we've seen so far. But that the ability to have digital scarcity online allows us to digitize other collectibles and other rare items online. As far as the way that they're taxed or looked at, I guess there's two main elements that most people would be familiar with. It's either as a collector or as an investor or as a creator. So if you're a creator creating NFTs, typically how that would be applied is that your sale price of the NFT would be classified as ordinary income. And I'm going to let Thabo dive a little bit deeper into the specifics. But so let's say Dan creates an NFT. I sell it for 1 ETH. It's roughly $3,000. I'd have $3,000 of ordinary income that I'd have to file on my taxes. It gets a little bit more in depth if you're an individual versus a corporation as a creator. And then as a collector, it's pretty similar to how regular cryptocurrency is taxed. Essentially, a lot of these NFTs require you to have crypto to buy, purchase, sell, trade them. So if I'm purchasing an NFT, I'm using typically either Ethereum or USDC or sometimes DAI or WETH. And that asset that I'm disposing of would have a capital gain or cost basis to it. So to back up a second, let's say I bought Ethereum at $1,000 and I buy 1 ETH. And then I use that 1 ETH to buy an NFT. I'd have a capital gain of disposing of that ETH based off when I bought that ETH and then when I disposed or purchased NFT. Then that new NFT would have its own cost basis based off that sales price. And then if I sell that NFT down the line, that would be subject to capital gains as well. And most of the time, as a collector or investor, those capital gains would be on your Schedule D or your 8949, just like a traditional trade from ETH to Bitcoin or USDC to DAI or something like that. So hopefully that gives like a somewhat high-level overview of NFTs and a little bit into how they're taxed and viewed.
And one thing that I think would be really important to add is that there's not any specific guidance in the United States right now around NFTs. So a lot of what we're doing with NFTs is we're taking the guidance that already exists around cryptocurrency taxation and applying that to NFTs. And then we'll get into this probably a little earlier on. There's a couple specific things around NFTs, being that a lot of them are considered collectibles and art. But it's definitely super important to know that, and that just like there was, as cryptocurrency taxes evolved, there's always new guidance coming out. So, the rules that we have today, or the guidelines that we're attempting to interpret the rules as today, might not necessarily be the same that we have in a year or two. This is definitely a really fun, interesting space that's evolving, and one that you definitely want to keep up with.
And I think I read in the accounting today that the Congress is actually debating a provision this week on increasing the tax reporting of cryptocurrencies, and that might affect the NFTs. Do you actually expect for the particular regulations for the in US, of course, to be introduced for the NFTs? What's the kind of timescale here?
Yeah. So that's a great question. So without getting too into the U.S. law creation process, generally speaking, a bill, once it's kind of drafted and created, is never the same when it enters the door as when it exits the door. So the one thing I can say with confidence is there's probably going to be some tweaks between the proposed changes that they have now and what is eventually going to come out. A lot of the laws that are currently being debated in the U.S. are around people who act as brokers of cryptocurrency who facilitate transactions. There are some stuff in there around tax reporting as well. So I think you know, we're not going to know for sure until it's done. We can kind of see where people's minds are going, but the process of a bill being created in the United States, going through the House and the Senate with agreement on both sides in the climate that we have, political climate we have today, I'm personally not super worried. Once it starts getting more steam, maybe once it passes the House, then we're going to really kind of start focusing on it. But for right now, we're going to take the rules that we have today, work with what we know, and then when that changes in the future, we'll adapt.
Mm-hmm. Thank you so much. I think perhaps we can get more into the taxation from the perspective of the creators. And Andrew, you, the co-founder of DoinGud, this up-and-coming platform. Can you tell us an average creator who wants to sell their art, what can they expect coming to the platform like yours?
Yeah, I mean, so the very basis of a creator's taxation around NFTs is just the income that they're going to get from selling their NFT. So like any other income that you'd make from selling your services or goods, you'll need to be well tracking the amount of income, no matter which currency you're receiving it in, whether it's crypto or whether even you receive fiat from an NFT sale, that needs to be recorded as income and will be taxed according to your income bracket. And that's the basis of it. I know there's probably a lot more details. I am a CPA, but not enough to be dangerous, I like to say. As I went the corporate and entrepreneurial route and still rely on guys like Thabo or Dan as well as getting into the nitty gritty, but yeah, that's the most important thing that creators need to understand. It's income. You're selling NFTs. It's income. It's going to get taxed, and even if it's in crypto, it's on a public ledger. That makes it more visible, really, in that sense. So
yeah, and I think one thing I'd jump into is, and yeah, for sure, any NFT creator, whether you're using the DoinGud platform or any other platform, there's two main ways that you're going to be taxed on NFTs as a creator. The first is going to be just your ordinary income, right? So the same way as if you went to a 9-to-5 job and you got paid wages, you're going to have to owe taxes on that. It's the same thing when you're creating NFTs. And that's generally just based on how much you sell the NFT for. That's your ordinary income. There's one other thing that I think is really important to talk about, and that is, if you are selling NFTs, you might not think of yourself as one, but you are a self-employed artist when you're selling NFTs. And when you are doing that, you are also subject in the United States to what's called self-employment tax, which is an additional tax that's separate from ordinary income. But there's a flip side to that. And that since you are a self-employed artist, you are in the business of selling art, that also means that you can deduct all the expenses that are related to creating and selling those NFTs. So for example, one of the big number ones is gas costs, right? So you moving things around on the Ethereum network, selling your NFTs, all those gas fees that you pay now are a deductible expense. But it goes even further than that, right? So if you were paying, somebody to help you in selling those NFTs, if you had some website that you're running and you have costs for that website, you can deduct those costs. If you're going to conferences where you're going to be selling NFTs, talking about NFTs, crypto conferences in general, all those expenses, since you are now a self-employed artist, are things that you can deduct as well. And so, yes, there's the downside of you have to pay taxes, but there's also the upside of saying, okay, now that I'm in the business of doing this, there's deductions and other tax credits that I can get as well.
Fantastic. We actually got a question coming from Ania Poullain-Majchrzak. She says, who carries the burden of the taxes? If the creators have companies and are invoicing their clients, VAT burden is often reversed. Is it reasonable to expect the same happening with NFT sales? Does any one of you want to react to these?
So I'll start with saying that we don't handle a lot of VAT in the U.S. So VAT specific, I'll kind of take a step back on that one. But as far as the burden of taxes goes, so if you're a creator, if you're the one creating it and you're earning income off of it, for the sale of an NFT, you owe those taxes. Now, if you are a platform that is selling NFTs and you are then making a profit on whatever that profit that you get as a platform, that would be your taxable burden. And then we'll talk probably more about investors and how they pay taxes later on as well. So, Ania, I hope that answers at least half of your question. I can't touch that side.
Ania also says, would these expenses need to be first officially recognized by the authorities, or can one claim them regardless?
Yeah, so when you are a self-employed individual in the U.S., as long as an expense is a ordinary and necessary is the term that we like to use as CPAs, an ordinary and necessary business expense. So a real expense that is important and crucial to you doing your business, then you can claim that as a deduction. You can claim that expense. Now, you're going to need to do things like keeping receipts and stuff like that, or at least some sort of ledger, right? So for you don't get a receipt from the Ethereum network, so to speak, every time you send a transaction, but those things are recorded on the blockchain. So the main thing is, one, is it a bona fide, ordinary, necessary business expense that's actually important for you running your business? And then two, make sure you keep good records. And as long as you can satisfy those two things for the most part, you can claim the expense.
Yeah, fantastic. I hope that satisfies Ania's question. And now perhaps we can move to the other side of the spectrum. And Dan, what's the situation looking like for the collectors? I know that you're an investor and also you consult other investors, perhaps collectors as well. What's the situation then?
Yeah, I'm lucky enough to own quite a few NFTs and a big collector and investor myself. From an investor or collector perspective, taking kind of the flip side of what we talk about from a creator perspective, if I'm collecting an NFT, typically when I'm purchasing that NFT, there's a few platforms that do accept fiat or dollars. Speaking specifically on the US, dollars into crypto, but most platforms typically will have crypto to crypto. So you're using ETH or USDC or DAI or WETH or some type of crypto to actually purchase that NFT. So there's a few things to be mindful of when you're purchasing or collecting an NFT. One would be the cost basis that you are using that initial purchase from. So if I'm using ETH and I'm buying a piece of artwork for 2 ETH, when did I originally acquire the ETH? When I acquired the ETH, have I held it for longer or shorter than 12 months? So short-term or long-term capital gains. It's really kind of the two main factors when I'm purchasing a piece of art. There's now, as the NFT market has explode and become more and more prevalent, there's now ways that you can use your NFT and have utility from that NFT. So I can actually fractionalize my NFT and earn income myself off the NFT that I own, which is kind of interesting. I can also resell that NFT. So if I buy it for 2 ETH and sell it for 10 ETH, I'd also have income in addition to a capital gain. But typically from an investor collector's perspective, you'll have either that long-term or short-term capital gain. Typically most of your investment from a tax purpose will happen on your Schedule D or 8949. And platforms like ZenLedger allow you to easily ingest and put together a complete tax report based off all these factors. As Thabo mentioned earlier, some of those gas fees that you have for purchase can actually be rolled into your cost basis, which could reduce your short-term or long-term capital gains as an investor or a collector. So platforms like ZenLedger and other crypto tax softwares will allow you to simply ingest, a MetaMask address, a My Ethereum wallet address, and then any exchange activity, so we can accurately track your cost basis of the original purchase. Then we can show when you dispose of that asset and purchase the NFT, and then what happens after that moving forward, whether you resell the NFT or fractionalize the NFT and earn income from it. So hopefully that gives kind of an overview from the investor or collector side.
We've got another question. Go on, Thabo.
Okay, no, I was just going to also add that if you are a collector, and I use the term collector and investor interchangeably when I'm referring to NFTs, if you are a collector of NFTs, you absolutely need to be using some sort of crypto tax software. Dan, the ZenLedger platform is fantastic. I use it. I recommend it to a lot of people all the time. There's also other ones out there, but the most important thing is you've got to be using some sort of software to help you do this. This is not something you can do pen and paper. This is not something that you can do on an Excel sheet. This stuff is really complicated. And the other thing that I'll add is that for anybody listening who might go and look and say, okay, you know, this software might cost me a few dollars, I promise you, you're going to save more money in taxes by using the software than you are going to spend on the software, and it's going to make your life a lot easier. So I know Dan's not gonna. I'm gonna go ahead and plug ZenLedger for Dan. But in general, crypto tax software is absolutely essential to doing this. And one thing that I want to add, because I also want to kind of give you guys kind of tax savings tips. Dan kind of touched on this, but there's a difference between short-term and long-term capital gains. So if you hold an NFT or any cryptocurrency in general for more than 1 year, 12 months before you sell it, you are in almost all cases going to pay less in taxes than if you sell it within that 1 year period. So for example, here in the US, capital gains rates at a federal level are normally going to be around 15%, 20% for higher income earners. Which is, so that's after, if you sell it after 12 months, versus if you sell it before, depending on the state you're in and your income, you could be looking at 25, 30, 40% even tax rates. So it's definitely going to save you a lot of money on taxes if you really buy and hold those NFTs for the long term.
That's another good valuable tip, which we said at the beginning we're going to have a lot of. But Dan, perhaps you would like to expand a little bit more. How does one choose the correct software for their needs?
Sure. I mean, obviously, I'm biased as an investor and an operator of ZenLedger. Using ZenLedger is a great option. Typically, for us, we have a competitive comparison that's listed on our website that gives an overview of the software, the costs, the benefits, and things like that. Really, the way that I look at it is, as cryptos continue to evolve, the nature of crypto taxes has evolved with it, and the ability to accurately read and provide accurate tax forms has continued to get a little bit tougher and tougher. So some platforms will give you a little bit of more high-level crypto tax accounting. So if you're trading from Coinbase or Binance or Gemini or things like that, pretty kind of high level from a complexity perspective. There's only a few softwares that really allow you to get into DeFi or NFTs or into DAOs. Really, the ones that we've seen is really in the US would be us and Token Tax that have gone really deep into DeFi and NFTs, which allows you to ingest that information natively. So instead of me having to, like Thabo said, using an Excel doc or handwritten notes or, my notepad and try to remember when I sold this, when I bought it, how much was this, what was the USD value when I purchased, we allow you to simply ingest a wallet address or an exchange API. And we'll pull in all that information for you and then aggregate that across all of your exchanges, all of your wallets, all of your DeFi protocols, all of your NFT platforms, and then provide you with fully completed IRS tax forms to then file. So we make it really quick and easy. So if you're interested in learning more about ZenLedger, welcome to come to our site. We also have that competitive comparison. So what I would look for as a user would be obviously the price. As Thabo mentioned, or at least for us, our pricing ranges from $0 to $3.99 per tax year. And then we have tax professionals on staff that can help you file your crypto and non-crypto taxes. So a lot of our investors, especially in DeFi and NFTs, like to have a tax professional that are handling the importing, the reconciliation, and the overall filing for them. And especially since they can handle anything that's crypto and non-crypto related, so if you're an investor, but you also have a company outside of crypto, or you're an employee of a company outside of crypto, or you have stocks, bonds, real estate, we can handle all that for you. So I would look at obviously price, support, the team, the software, and things like that. But we have that competitive comparison chart on our website, and we'll be happy to help anyone that's listening with any of their crypto accounting and taxes.
Mm-hmm.
Yeah, and when you're shopping for softwares, features are definitely super important. So not every crypto tax software like Dan said, will natively integrate to an Ethereum address. Not every software out there is going to be able to handle margin trading. Not every software is going to, there's all these different things that you want to make sure you're looking at, because they're definitely not all created equally.
Now, the obvious question that comes to my mind, and Andrew, perhaps you can help me here, because I know that one of the features of DoinGud is that you will be able to pay with fiat. Is the situation different if you pay with fiat than if you're buying NFTs with Ethereum or Bitcoin?
Yeah, I mean, the main difference then is if you're paying in fiat, you don't have to deal with the capital gain additional tax as if it was crypto. I think Thabo and Dan both talked about this recognition of a capital gain if you paid for an NFT with Ethereum, for instance, that has gone up in value since when you initially acquired it. So when you're paying in fiat, if I understand correctly, that you don't have to worry about the capital gain piece, since that's the traditional currency. So one I guess advantage of that form of payment.
Sure. And we've got one more question coming from the audience, and the question is, can one only deduct the expenses, or is it also possible to write off taxes in the event of a donation is made while purchasing NFTs? So we were about to just discuss the aspect of donations. Yeah, which one of you is happy to take this on?
Sure, I can jump in and maybe Thabo has some additional information. From my information, the ability to do both exists. The separation would be if you're deducting expenses, typically that's on the creator side. So as a collector or as an investor, there's no real expense that I can deduct. There are ways to efficiently pay your taxes. And from the collector or investor side, using crypto, there's ways using those gas fees to roll them into your long-term and short-term holding periods. There's a few factors that can help you optimize your taxes, but from deducting an expense is typically more on the creator side. As far as writing off taxes, that can be on the collector or investor side. So you actually can donate, you can donate pure crypto without it having to be an NFT. So I can donate Bitcoin or Ethereum or USDC or whatever, and actually have a benefit for my taxes for that donation. One thing, we talked about feature sets earlier. One thing that is nice with ZenLedger is, in addition to our tax loss harvesting report, which will show you what assets you have that are currently at a loss that you can sell to offset your gains, we have also partnered with a firm called the Giving Block, which allows you to donate your crypto directly to a nonprofit organization and have that donation captured in your ZenLedger reports, which can help reduce that overall tax liability. So that's probably where I would touch on both of those. But Thabo, obviously, if I miss anything, feel free to chime in.
Yeah. I'll add a couple things here. And Ania, great question. A few things. So, and this is one of the reasons that you can get really kind of lost in the details when it comes to taxes. And this is one of the reasons that every time, I do a podcast, I always say, hashtag not financial advice, hashtag not legal advice, hashtag not accounting advice even, every situation is different. So when you say expenses, somebody with an accounting mindset like Dan or I, we interpret expenses to mean costs, like peripheral costs related to it. So meaning like gas fees and different things like that. I'm not sure, Ania, in your question, if you mean, but when expenses, you mean the purchase price of the NFT, because to some people they might consider that an expense. So I just want to kind of make sure that so Dan was talking about kind of expenses related to the sale and different fees. But yeah, so the is going to kind of be your basis that you're using to calculate a gain and loss. And then I know you also kind of are talking about donations in here as well. So I just kind of want to make sure that we clarify too that yes, you can donate crypto. There's generally not a taxable event when you donate crypto or an NFT as well. So just kind of wanted to just caveat that. And then one other thing, going back to what Andrew said related to using fiat, is that Andrew, you're absolutely right. If you are transacting in fiat at the exact same price, if there's no change in price with fiat, then there's no capital gains. But if you buy an NFT for $100 and then sell that NFT for $2,000, there are still kind of gain portions. So you were right, but I just want to make sure the audience We've heard the nuance in that. Don't want people to think that, oh, there's no capital gains if you're just using dollars.
Right. Yep. On the secondary piece, on the sale, on the later sale, of course. Yep.
Yeah. But when you're just kind of moving things back and forth, buying and selling, pricing is the same. Absolutely correct.
Definitely.
And now that we touched the subject of donations, Andrew, perhaps you should tell us a little bit more who should actually get those tax benefits.
Yeah, I think that's kind of where Ania was getting at with the donation question, since that's core to what we want to do with DoinGud and streaming money to social impact organizations and causes. And we've been very interested in how we can also provide value to either the collector or the creator to make sure that they get credit for this donation that will get streamed to the social impact organizations or causes. And we understand that the key kind of underlying, I guess, piece of what will determine who gets that credit for the donation is who's actually in control of the money that will get streamed to the social impact organization. So like kind of depending on a lot of like kind of details and how the money might get moved and where the decision points are, who's choosing the social impact organization or cause will likely be the deciding factor of who has the power in making that donation and in effect who gets credit for that donation in terms of taxes.
Yeah, and one kind of easier way to think of it is just who's the person giving up the value, right? Who's the one who's sacrificing the value that they otherwise would have gotten, and that's generally the one who gets the tax benefit.
Exactly.
Right, and of course, it's obvious that you should tax yourself just depending on where you're based, right? So even you can use whichever NFT trading platform you're using. It doesn't affect about your situation as a creator or collector. And I was wondering, because when it comes, obviously Dan and Thabo, you both based in US, and I've got a good quote here from Sean Hanley from Reuters, who's a tax consultant at Reuters, and he says, NFT are kind of a gold mine for the IRS because it really produces multiple taxable events for the parties involved. And that, right, that's how they look at it. And I was wondering if any of you would like to comment on the fact, like, how the situation in the US is affecting the rest of the world.
Sure. Yeah, happy to jump in. I think as Thabo mentioned earlier, the tax guidance in the US is continuing to evolve. So we really started to see the first guidance back in late 2013, early 2014. And a lot of that guidance has largely stayed the same since 2014. We've had smaller updates, but not a large update. Thabo mentioned earlier that a lot of NFTs and DeFi, to kind of lump that in as well, is kind of a gray area where we are taking tax codes and applying them to this new technology, not necessarily having new tax codes for this new technology. So the IRS definitely has a global impact on how other countries view and handle these assets. Other countries obviously have their own ability to create their own rules and laws, and we see this a lot with Eastern Europe or Southeast Asia that don't follow the same guidance as the US. Obviously, the infrastructure bill right now, which we touched upon, may have some impact on how things are reported in the US, which may not have an impact on other countries, other than the fact that if the US kind of cracks down on some of these brokerages, and the broker word is a little wide, which I think is why we're having some contention of that word. So when you think broker, most people would think of a Coinbase, a Gemini, a Kraken, a Bittrex, but the language revolving around that right now is somewhat, could be specified to include miners or Lightning node net operators or DeFi protocols. And that's really where the contention of the crypto community is starting to phase back. So I guess my point of that is if those laws go into effect and pass, we could see a lot of this innovation move offshore from the US into other countries, which could then impact the way that they start treating these items as new companies and new protocols and new income and new capital gains start to go into those countries. Thabo, I don't know if you have anything else on that.
Yeah, I think it's just at a high level, and this is kind of the little nuance in that the US in a lot of ways has led in cryptocurrency tax rules, and they've led more in classification than in specific rules. And so what I mean by that is, and the first guidance that ever came out, really all it said was that we think of cryptocurrency as property. That was the US the US IRS saying that's how we think about cryptocurrency. And by saying that all that is saying is that we're just going to take all of our old property tax rules and apply those to crypto. And a lot of other countries have kind of followed suit in saying, hey, we're going to consider crypto property, and we're just going to tax it like we've been taxing property for 1,000 years. Now, every country taxes property differently, and that's why, you know, Australia and Germany and all these different countries are going to have different rules. But that general approach that the US made of saying, hey, let's just find a bucket and put it in that bucket, that's what most countries have done. Now, there's other countries, Dan kind of alluded to in Southeast Asia, Singapore has been a leader. Other countries have said, you know what? No, actually NFTs, actually crypto, this is something totally different, and we need to just make new tax rules around that. That's been the minority of countries, but most have kind of followed in that US footsteps of, let's find a bucket, stick it in that bucket, and then move on, and then clarify issues once people start going to court.
We also have situations like, you know, the existence of Puerto Rico and other tax havens. So is that going to be a trend? Will we see more collectors or, I don't know, NFT creators moving to these places because of the, you know, very beneficial tax situation?
Yeah, so and I think this is kind of just like a broader conversation too around different countries being more favorable, different regions being more favorable or less favorable. So you mentioned Puerto Rico, which has earned itself the nickname Crypto Rico because so many US crypto investors have moved to Puerto Rico because one, it's a US territory, so it's very kind of seamless for people in the US to move there. And two, because Puerto Rico has really friendly capital gains rules. So thinking about, you know, from an NFT perspective, the investors in NFTs or crypto in general, Puerto Rico has a zero capital gains tax. So that's a big reason why a lot of people have moved there for residency purposes, is to avoid paying that tax. But besides Puerto Rico, there's a lot of different tax jurisdictions in the US, and each one can impact people differently. So Puerto Rico is a great one if you're an investor, right? So if you think if you're going to be getting capital gains, if you go to Puerto Rico, you can offset a lot of those. There's also different states within the US that have no income tax. My home state of Florida, we're based in Miami, is one of those states. And so if you're a creator, you might want to look into a state or a jurisdiction that has low income tax, because if you're a creator, you're earning income. If you're an investor, it's capital gains. So the US actually has some relatively friendly tax jurisdictions, whether that's low income tax states for creators, Puerto Rico for investors. There's also very unfriendly jurisdictions, like not all states will tax your capital gains, some do, like California is an example, they'll tax capital gains in addition. So also all things that are important to keep in mind. And then outside of the US, there's also different countries that tend to be crypto friendly. So I mentioned Singapore is one, Malta is another, Portugal, Germany, all these different places tend to have crypto friendlier tax laws. Those can always change and the list will evolve, but there's definitely a lot of options out there in today's world of work from anywhere, and your tax jurisdiction can change.
But this is not a tip, I suppose, because we won't be advising people to move to Puerto Rico. I think it's quite dangerous because you might get too much of a hangover. So I don't think
Puerto Rico is a lot of fun. I visit there all the time, so definitely.
All right, okay.
There's
so you know,
serious risk of dancing yourself till you're sweaty and coming home with a hangover. Yeah. But in all seriousness, though, on the Puerto Rico piece, I do want to add, And we do have some clients based in Puerto Rico as well, so we're familiar with this. It's not as easy as I'm going to move to Puerto Rico and rent an apartment and I don't pay capital gains taxes ever. We won't go into it too much on this podcast, but you have to kind of go through an application process. You have to prove residency. It's not that simple, but it is doable.
Maybe we should do the podcast just specifically on Puerto Rico, because I think there's lots of, yeah.
That sounds like a fun podcast to me.
Yeah. Any other tips? What other tips do we have for people who want to create or collect NFTs?
Dan, you want to maybe touch on the collectibles issue, and then maybe I can go in a little more depth on it?
Sure, yeah. One piece that is still largely in a gray area or evolving area is if NFTs are treated as collectibles versus as property. And that property classification, as we walk through, kind of creates these other, not maybe issues, but things to be aware of, such as the cost basis or gains, losses, short-term, long-term, things like that. So as if certain elements of crypto or NFTs are treated as collectibles, it opens the door for potentially better tax treatment for collectors and investors, but potentially it could open the door for higher taxable events and gains, especially if you have a higher income bracket. So the one thing that I'm aware of is for high net worth individuals that would have these assets treated as collectibles for them, that could impose them to higher capital gains and then actual income rates on that as well. So that's just one thing to be aware of. Obviously, we have a tax code that typically will like to tax, if you make more, you get taxed a little bit more from a percentage perspective. But I think that's just an interesting thing to look at from if these things are going to be treated as collectibles, if you're a high net worth individual. But even if you're an individual that may not be high net worth, the impact that treating these things as collectible versus property could have would be pretty large. And obviously, Thabo is a little bit more, has a better understanding of the intricacies of the tax code and maybe can provide a little bit more information there.
Yeah,
Great.
no, and
Hello?
hey, sorry, I think I cut out for a second. Can you guys hear me all right?
Yes.
Back.
Now it's good.
Okay, all right. Yeah, so on the point around collectibles, and what Dan's referring to, there's actually a tax section 408 where it defines this thing of saying basically, if you are collecting pieces of art, that's different than what we talked about with property. And so there's this whole subsection around collectibles. And this is an old piece of tax code. This was never intended for NFTs specifically. But what happens is, once NFTs were created, people said, well, there's these different rules around collectibles, which is different than property, which is what crypto is. And so the IRS hasn't really come out and said, is an NFT a collectible or not? So right now, the general consensus among CPAs is that we treat them as collectibles. And as Dan mentioned, this really is mostly only an issue if you're a higher income earner. So for example, I'm going to give approximate numbers. If you're in the US, if you earn or have about more than $440,000 a year in income, or if you're a married couple with about $496,000 in income, then this collectibles thing might be an issue for you. And really what it comes down to is, I mentioned before, the highest long-term capital gain rate is generally 20%. Most people fall in the 15% bracket. If you consider NFTs to be a collectible, then that number on the high end can go up to 28%. And then there's also going to be some net investment taxes as well related to that. Basically saying if you earn a lot of money, you might end up paying more. It's a little bit of a gray area, meaning the IRS hasn't come out and officially said one way or another how they treat NFTs. So that's definitely something to watch. And again, mostly just an issue if you're making a ton of money. And at that level, you should be hiring a good crypto CPA anyway.
Excellent. Any more tips? I've got a, yeah, Thabo? Yeah?
Yeah. No, I definitely. I have some tips, but we can kind of do that at the end if you have a couple more questions.
Okay. So I was thinking, Andrew, because you, of course, value all the members of DoinGud community, do you kind of send them to particular resources when it comes to tips and information on things like taxation? How should? Yeah.
Well, I think DoinGud is very much a global team and community. So we're actually looking to make connections in many different jurisdictions and countries to understand the specifics that impact everyone on the team and the community, and how they should be kind of working with professionals on these pieces. I can't recommend more Thabo and Dan here with us today on the US side, and yeah, that's the approach that we're taking, is that like we want everyone in the community to be connected to the experts in their areas, and this isn't something to go at alone. Like these guys have said, there's a lot of gray area still in this new world and innovation of NFTs, and it's best to be working directly with someone that's closest to the governments, to the tax regulators, to make sure that you're handling it appropriately.
Absolutely.
And I can definitely just echo that, in that it's super important, and and I know a lot of the people listening to this are going to be artists, creatives, people who might hear things like tax and kind of get a little scared and a little nervous. One of the main things I would say is that if you're an NFT creator, or even if you're an NFT collector, investor, and you don't need to know all these tax rules by heart, you don't need to go study the code. What you need to do is you need to find some sort of way to keep track of all your stuff. ZenLedger is a great option. Any type of crypto tax software is better than doing nothing. And then two, once you get to the level where you either have a decent amount invested or you have a decent amount coming in, bring in somebody to help you and to partner with you and to take that off your plate. Because as an artist, you don't need to be spending all of your time worrying about the tax code and all these different updates. You just need to make sure that you're reporting everything, you have some sort of team or some sort of tool to help you, and then you focus on creating great art, making awesome NFTs, and then furthering the crypto industry, and let people like Dan and I help you on the back end make you successful.
Fantastic. Perhaps before we get into more tips, we can see if you have any questions to each other.
Dan, I would just kind of ask you, when the NFT investors that you have who use ZenLedger, what's kind of their experience been like, kind of using with NFTs on the platform?
Yeah, so we started building NFT support about 9 months ago. So for some listeners, typically the way that NFTs are built, especially on Ethereum, would be from a 721 or 1155 token standard, which is similar to not similar, but in reference to an ERC20. So a lot of people are familiar with ERC20 tokens. Most NFTs on Ethereum are built on 2 token standards at the moment, and those token standards will continue to evolve. So for us, one thing that makes it really easy is once you are able to accurately read through that token standard from a blockchain perspective, seeing what happened in that address or on the blockchain really makes it easy. So rerun full nodes for over 45 different blockchains, which allow us to kind of sync all that data in there. Long story short, the way that we see NFT investors largely right now, I'd say about 95 to 98% of them are using Ethereum-based NFT platforms. So whether that's DoinGud or Super Rare or So Rare or Nifty Gateway or items like that, we've seen some improvement and somewhat explosion on Binance Smart Chain and on Solana, of which NFTs are starting to get a little bit more popular on those platforms as well. We do have support for Binance Smart Chain and Solana, so really quick and easy to ingest that data from those blockchains as well. So typically for us, an average NFT investor is simply importing all of their exchanges, all of their wallets, all of their NFT protocols, and then we're able to aggregate all of that into full and complete tax reports. So I'd say we have probably about 75% of our NFT investors are using kind of our do-it-yourself option, which they're simply importing, Coinbase account, a Gemini account, a Uniswap account, then their MetaMask address, and we're aggregating all that for them. They may have an interaction with our customer support team, and then they're kind of on their way. The other 25% are definitely more in that higher price tag category that are choosing to work with a tax professional. We have tax professionals on staff that range, between $2,000 to $5,000 in addition to the software. And that tax professional, like Thabo, would sit down and walk you through all of these items, all of these intricacies, really walk you through, all of your income across crypto and non-crypto, and really ensure that you're optimizing all of your taxes, specifically around crypto as well. And those investors are definitely more of the, crypto native community. They're people that may have bought a CryptoPunk at 0.3 ETH and just sold it for 30,000 ETH. So these are people that are making hundreds of thousands, not millions of dollars in NFTs, which sounds pretty wild. But when you look at like floor prices for CryptoPunks or Meebits or Bored Ape Yacht Club, these floor prices and overall value of these assets are growing exponentially even as we speak. So the income that these creators or the capital gains that these collectors and investors are making, it really does make sense, when you're at that level, to start paying a little bit additional price to have a tax professional kind of walk you through. And then what we typically see with NFT investors and DeFi investors is because of the nature of the tax codes around them, there is kind of this gray area. So a lot of people really want, and I don't know if this is a preferred term for Thabo, but a lot of people think of a tax professional as having kind of audit protection, or having someone that understands the tax code, that's walking you through that, that's helping to optimize this for you. And then especially with us, our tax professionals are actually signing off on your tax reports. So having that extra layer of protection and security, for a lot of people is well worth, the $2,000 or $5,000 or $10,000 that they're paying to have that done. So I guess in synopsis, we can automate a lot of that for you, where if you're an ordinary investor, you can kind of just self-service your way through our platform, and that's in that $0, $49, $149, and $399 per year on the US side. And then we have those options for the tax pro. So about 75% probably self-service, and then 25% are more on that higher price tag, which they're looking to have a tax professional.
Yeah, no, that makes sense. And that kind of echoes what we see at our firm, almost to similar percentages as well. And one thing, and you brought up the CryptoPunks, and a lot of people just making pretty incredible profits on that. That's just one of the things that I really like about this NFT craze, which is different than the ICO craze or kind of different things, is because a lot of the money being made in crypto in the past, since the creation of Bitcoin, a lot of it was money being made by computer people, by finance guys like you and I, people who are kind of used to having a lot of money. And one of the really cool things about this NFT craze is that it's brought a lot of income and a lot of value towards artists and creators, which I'm super happy to see. And it's one of the things I'm just like really passionate about, helping people in this space. And those people are the ones who kind of need to know, like, hey, you need to get some help on the tax side of this. And one other thing, I think I'll give kind of some in the weeds tips, piggybacking off what Dan said. Now, whether it's you're paying someone like me to go in and do it for you, or whether you're doing it yourself, typically how the actual kind of getting your tax data together works is through some sort of API directly to a blockchain or to an exchange that you're using. And so one tip that I can give to creators is that if you're going to be seriously moving through a lot of NFTs, don't use a lot of different Ethereum addresses. Try to just use a few, because every single address that you're using and transacting out of is another API that one of us is going to need to set up, or you're going to have to set up yourself. So try to kind of keep things simple, try to keep things together when you're doing that. And that'll definitely save you a lot of headache. And one other thing that I'll add, and this is maybe more on the investor side of things, is that a 10-cent NFT is just as complicated as a $10,000 NFT when it comes to taxes. So if you come to a CPA and you say, hey, I've got a small NFT portfolio, it's probably worth $500, but there's 5,000 NFTs in there, that's going to cost you just as much money as a $5 million portfolio with the same amount of NFTs. So from a tax preparation perspective, so definitely think through you know, that as like a cost when you're thinking through NFTs, right? You know, you know, you might have fun with the 10-cent ones, but those can add up. So definitely two tax savings there for you guys.
That's really good. And thanks for sharing. I want to echo again that how amazing it is that the NFT technology is really opening up this world and financial opportunity for beyond just the finance and the earlier adopters of crypto, but what it's opening up for creators and what we want to do as social impact organizations, and the ability to continually stream the royalties from secondary sales. It's really, really exciting. I think that's what gets us up every day, and is really kind of an opportunity to really kind of open up this world to more and more individuals.
I don't know if it's just me, but I can't hear you.
Okay,
yeah, sorry.
I can hear you.
I thought that was smart.
Sorry about that.
We were all kind of waiting politely, thinking we were all.
Maybe it wasn't important what I was saying, but I just wanted to say that it's what Andrew said. It just goes back to the foundations of the cryptocurrency philosophy. You know, not just rich get richer, but also other players in the space can actually benefit from this whole ecosystem, such as creators. And I think we could, on this positive note, maybe we can close this discussion. And I would like to thank you all. We've been talking to Thabo Abbate from Arbitus LLC, Dan Hannum of Hannum Capital Management, Andrew Kline of DoinGud. I'm Ania Poullain-Majchrzak. I'm a journalist and filmmaker. It's been a pleasure talking to you all. I think the audience and the listeners will really benefit from all the tips and everything that's been said here. And next week, we're going to talk about the issue of NFT royalties in the music industry. It's going to be same time on Thursday. So I encourage everybody to join us then. But right now, thank you all for participating. Thank you for listening. Have a great weekend and see you soon again.
Ania, thank you so much.
Thank you.
Thank you.
Okay.
Is it?
So,
are we still live?
Sorry?
Are we still live?